Hello everybody, welcome to Bitcoin Not Crypto. My name is Forrest Stevens, and in today's video I'm going to be discussing the catalyst for MicroStrategy coming up on January 17th, which is a historic options expiry day. There's a huge amount of open interest. A lot of options will be expiring on January 17th of 2025. So what does this mean for the market? What does this mean for MicroStrategy? Will this be bullish? Will this be bearish? I'm going to discuss my own thoughts, some of the information just about this, what usually happens, and what we can maybe see happen that day. Before I do that, however, I'm going to tell you about Bitcoin Well, which is where I buy all of my Bitcoin. If you're long MicroStrategy, you should be long Bitcoin because that's the whole basically concept of MicroStrategy. However, in my opinion, Bitcoin itself is actually a better buy. I hold most of my net worth in Bitcoin itself as a hard asset. And I basically only hold MicroStrategy in registered accounts where I cannot hold Bitcoin. The reason I use Bitcoin Well is because it's a self-custodial exchange, which means you send them money, they send you Bitcoin directly to your hardware wallet, which eliminates the third-party risk of exchange failures. They also have the lowest spreads in Canada and the US, and that just means more Bitcoin for your money. And they also have a rewards program if you use my link, which is in the description, as well as you can scan this Lightning code, which is their rewards program, and get some free Bitcoin. They also have some non-KYC options available, which is really awesome. So check them out, link in the description. So to sum this all up and to explain it a little bit, there's a lot of open interest, a lot of long call options in a varying degree of strike price that will be expiring on January 17th. Now, there's some information that we're kind of lacking here, some that we don't have, some that we kind of have to speculate on, right? If we knew all the information, we could just make some very asymmetrical bets. However, a lot of things are kind of left unknown in the market. So I think what we can do here is we can take this information down and see if any of it is useful. So at one point, January 17th, 2025, were the furthest away options from expiry when MicroStrategy was starting to gain some popularity with traders and with option buyers. So what happened were there were a lot of people buying basically when the price was around what's estimated to be at about $25 in the split adjusted price. $25 the price was at. And so people were buying the furthest away. So they were buying these leaps, basically options that are really far away from expiry. They were about 2 years out of to expiry. So 2 years ago, these options came out. People were buying them up like crazy, and people were buying them as far out of the money as possible as well, which was actually only $180 at the strike price. So we can see we're above 180 now. I mean, that wasn't so obvious back then. They were as far out of the money as possible, these strike prices. So they were the riskiest, albeit the longest to expiration. So not risky on that part, but risky on the strike price part. So this meant that the options were really cheap compared to what they are now. Some of these options have gone up basically about 10,000%. So people are incredibly in the money and have huge gains from buying these options. So ultimately, these options, they either are going to expire worthless if in January 17th, the price of MicroStrategy is below 180, where the most of these options are at, or they're going to expire in the money, which means they're going to convert into shares, or basically the market maker that issued these contracts are going to transfer shares to the owners of the options at the time of expiry. Now, it's up to basically the people that convert into shares from their options. It's up to them to decide what they do with those shares. Now, are they going to say, well, I want to be more leveraged than just owning shares? Am I going to sell some of these shares into the market? Or am I going to just hold these shares? There's some speculation here that these people potentially don't want to actually sell the options. They've been holding these for 2 years, some of these people, and they've seen such an incredible gain on their investment that if they were to sell these options before they expired, they would have a huge capital gains event, which would go against, them come tax time. So there's sort of an incentive to allow these to expire in the money, to take the shares and then maybe keep those. However, the position is different, right? Owning shares as opposed to owning this option is different, especially when they bought them. I mean, now it's trading a little bit more like a stock would, but the position size is quite significantly different. They would have to have all that cash on hand to actually afford the shares at that strike price of 180 as well. So are we going to see individuals who bought these, or even institutions who bought these, convert into shares and actually spend their dollars to own those shares? Or are we going to see basically market makers and option buyers convert into shares and sell those and just keep moving up in their positions? So we're not 100% sure, but these are just some of the ideas and facts that are going around with this historic January 17th options expiry event. Now, there is the possibility, although I'll say that the possibility, in my opinion, is very slight, but there is the possibility of a delivery squeeze. Now, what this event is as the market maker, the person who sells the option, they initially are not fully hedged so they sell an option contract that basically controls 100 underlying shares. They might only buy a small fraction of those shares because they don't expect that that option is going to expire in the money. They might not buy anything at first, right? They might just sell these basically naked calls, and then closer to seeing what these options are going to either expire in the money or not, they might shift their position. So as we get closer to January 17th, and as these options have been in the money for quite a while now, it's kind of not known how positioned these market makers are. Maybe they've fully hedged. Maybe they already own the underlying shares or are in a position to easily acquire the probably small percentage of shares they need to be able to cover these options positions that they have issued. If they're not, right, if they're really caught offside, if they think for some reason that MicroStrategy is going to dip all of a sudden back below 180 and stay there, and they haven't positioned themselves properly, and this happens kind of along the board, then what can happen is there's all of these market makers, all of these options issuers who issued these options that need to all of a sudden get shares to fulfill their options contracts that people are exercising. So, and then what that does is it creates a ton of buying pressure in a very short amount of time. Another thing here is that in November of this year, there were a lot more issues of out of the money options for January 17th. So they increased the strike price and issued more options with further out of the money strike price for the January 17th options. So a lot of these will expire worthless, which won't create a delivery squeeze. It won't create this potential of options owners turning into share owners, unless something absolutely crazy happens before January 17th and the price rockets upwards and puts all of these options in the money again. So another thing that's possible is because the majority of these options are at the 180 strike price, we could see that the market makers could throw some money around, really move the market, intentionally lowering it to below that strike price before that time, so that those options expire worthless and they don't have to fulfill those contracts. That would be incredibly beneficial to these market makers, and we can often see that to some degree in the market. We can see that market makers try to move the price so that options either expire in the money or out of the money for whatever reasons best suit them. However, this would be a huge price change, right? We're somewhere at 330 right now, down to below 180, and staying there until after January 17th is a pretty significant move downward. So with all of these things, you can kind of start to see that there's a lot of variables, there's some unknowns, and we really aren't sure exactly what to expect. However, I expect that there will be increased volatility to the upside or to the downside. I'm not 100% sure on that, but I will say that around this time, we will probably see some volatility spikes in the share price based on what is happening with the market makers and with this options expiry date. So the market makers, they continue to hedge the option with underlying shares, but they don't necessarily hold 1-to-1 for 100 shares for one contract. And a delivery squeeze is really only something that's going to happen if they vastly underestimate what percent of these options will expire. If they're pretty certain of what the market's going to be, then they'll be relatively close to that 1-to-1 ratio at the time of expiry, and the delivery squeeze won't happen. They'll just be able to basically match up what they need in a fairly liquid market and not have a huge amount of competition, so it's not going to drastically increase the price like a delivery squeeze would. They have to be caught really off guard by a very sudden price movement, very in a short span of time around an options expiry date like this. And they really don't want that to happen. So they're probably aware of that if it's significant to their business, and they're going to position themselves as best they can. This has happened in the past, but a lot of times with these kind of big expiry dates, people think it's more of a catalyst than it really is. And oftentimes this ends up being a nothing burger. I can't remember the exact date, but not too long ago, I think it was in November actually, we had another sort of catalyst, MSTR catalyst for an options expiry amount that was significant. It wasn't as big as this one, but it was fairly significant. And nothing happened from it. Nothing noticeable. I mean, it was just another day of a 120% implied volatility stock moving, which, you know, is interesting enough, right? So we're not 100% sure what's going to happen. These are just some of the information. I think likely there will be increased volatility, but a lot of the things that people kind of think will happen will probably not happen. I'm hoping that the market makers don't try to keep the price under 180. I think that's pretty much too big of a monumental task for them to do at this stage. And more than likely, a lot of these options will expire in the money. And the people that exercise will then lower their position size and exit out and just have a profit and move their money around into different positions that they want to be in. They wanted to be in options before, they'll probably want to be in options again, or who knows, depending based on the individual or institution that bought these options. I am going to throw up a chart here, and I'll actually link to a thread where I got quite a bit of this information from on Twitter at BTC Overflow. And this chart here shows actually some of the open interest, and we can see a little bit more of what's going on here. A lot of these options are at the 200, 1080. So we can kind of see that a lot of these strike prices are not going to hit, and a lot of these options are going to expire worthless. And that just means money for the market makers and not for the degens that bought these far out of the money, probably close to expiration, because it's only in November that these got issued. And, you know, that's another lesson of basically having a longer time horizon, right? The longest time horizon, in my opinion, is to own cold storage Bitcoin. And the second longest time horizon is to hold MicroStrategy shares for a very, very long time, long enough that the amount of Bitcoin per share that you buy and into today increases to more than you would have if you had just bought in Bitcoin, which takes a significant amount of time, I would say, based on projections. There's not really too much more that I can add to this, I don't think, but if there's something that I missed, if there's some questions that you have about this, comment them in the comment section on YouTube. I look forward to answering them there. You can find me on Twitter X at ForestHodl, and I'll see you in the next video.